Ladies and gentlemen, welcome back to another segment of Your Money with MRC. I'm your host, Hector Guizar. Today's segment, guys, that we're covering today is term life insurance. Exactly what we're going to cover today, the difference between term insurance, which is permanent, and term insurance. Term insurance, ladies and gentlemen, is exactly what it says. It's life insurance that terminates. Depending on your carrier and your contract, term life insurance is usually good for 10 years, 20 years, maximum 30 years. What are some of the benefits of having term insurance? Well, low cost for a high coverage death benefit, great for young families just starting out. You can never have enough of term insurance. You can never have enough insurance, period. Life insurance will cover mortgage balances, any outstanding debts, income replacement, estate taxes, and even funeral costs. Also, to keep in mind, money in the life insurance is transferred to the beneficiaries tax-free, guys. That's a big bonus. It is not taxed later. What are the downsides of a term life insurance contract? But once the term is up, the insurance becomes very, very expensive. It may expire when your family needs the coverage the most, does not build cash value, very expensive when you get older, and you must die for the benefits to be paid out. So what does MRC offer? We are a life insurance agency. We do offer term insurance from one of our A-rated carriers. But the difference is this, ladies and gentlemen. Our contracts are good from anywhere from 10 years all the way up to 35 years. So keep in mind, if you want a 12-year term insurance contract, we got that covered. You want 18 years, you want 32 years, we have that flexibility here at MRC. Not only that, ladies and gentlemen, with your term life insurance, we can convert you to permanent coverage at a later date to give the best protection for your family and protect them when they need it the most. So what makes MRC different from the rest of all the carriers that are out there for you to choose from? The carrier that we use, guys, provides living benefits for free. What are living benefits? Well, they cover chronic, critical, and terminal illness. Most term life insurance contracts, you have to die for the money to be paid out. Not with MRC. Let me ask you a question. You most likely will get sick before you die, right? So would you rather have the life insurance company pay out the money if you get sick or when you're no longer around? So let's talk about these benefits of critical illness. A lot of people don't even know what critical illness is. Well, if you have a heart attack, stroke, or cancer, these are forms of critical illness. If you are diagnosed with any one of these illnesses, the carrier that we work with, guys, will cut you up a check up to $2 million while you're still alive. A check made out to you, not your beneficiaries. Why is this important? Because according to the Heart Association of America, the average age for one of these illnesses is 43. That's right. We don't know what's in our food anymore. A lot of people are getting sick. It's 43 years of age, guys, for our average heart attack, stroke, or cancer. And the average age for a bankruptcy is 44. Most of these clients had health insurance, but the medical costs were so expensive that most of our clients had to go and file a bankruptcy for all the extra medical bills. What's chronic illness? Well, if you're unable to perform 2 of the 6 activities of daily living, which is bathe yourself, help eating, taking yourself to the restroom, if you need assistance with your daily living, again, the insurance carrier will pay out to 90% of the death benefit. This is not to replace health insurance or to replace long-term care, but this is to supplement these needs when you need the money the most. Okay, I tell a story to my agents when we do training. You guys remember a man we call Superman? He went out horseback riding one day, fell off the horse, and was paralyzed. He wasn't able to feed himself, bathe himself. He needed assistance for the rest of his life. If he would have had one of our insurance carrier, he would have got a check when that accident occurred, ladies and gentlemen. Okay, so it's very important to make sure that you're protected. What's terminal illness? Well, if the consumer is diagnosed with less than 24 months to live, again, the insurance carrier will pay out up to 90% of the death benefit. Well, what's the difference between other carriers? Well, usually with most carriers, if you have 6 months to live or maybe a year, then they will pay out a benefit, usually capping you out around $250,000. Again, with our carriers here at MRC, we can cut you a check up to $2 million. Now, why is this important? Well, let's just say you get sick or you're terminally ill and you're not able to get the treatment here in the United States. Your health coverage will not cover you here in the United States. What if you need stem cell research? You need some other treatment outside in Europe, China, Canada. This is when this insurance money would be best for you and your family to seek treatment in other areas or in a different state, a different country. Now, what happens if you don't get sick? Knock on wood. Now you can convert your term to permanent coverage. The difference with permanent coverage is that you can build cash value inside the policy so that later you could borrow from it, take a vacation, purchase a second home, or even help out your son or daughter with college expenses. Permanent insurance is coverage that doesn't terminate. It's going to be good until you're 120 years of age. What are some other types of term insurance? The few different types of term insurance out there, guys, one is called ART, annual renewable term. This is the most inexpensive cost of insurance that you have to renew every single year. Decreasing term is also known as mortgage protection. It's a high cost term insurance, and it becomes less inexpensive every single year. You want to get that term insurance to match up with the years that you have left on your mortgage. So if you have 18 years left on your mortgage, again, our carriers are flexible, and we can give you that 18 years of coverage to cover that mortgage balance so that if something was to happen to you or your spouse, that home is paid for. Another type of term insurance is term with ROP, return of premium. Most carriers that offer term with ROP do not offer living benefits. Return of premium means this. If you have the term for 20 years or 30 years and nothing happens to you, you get all your money back. Just like that. It's like gambling with your life. Okay? It's term insurance that you can get all your money back if nothing happens to you. But to keep things simple, guys, MRC has term insurance up to 35 years with living benefits. For more information, contact a local MRC office. We have over 40 offices nationwide to help serve you and your family. Our corporate office, as you can see the number below the screen, is 661-878-9822 for the corporate office to set up an appointment or get together with the MRC agent that sent you this video. See you next time. Make the right choice with your money. I am your host, Hector Guizar. You and your family deserve it. Till next time.